The Commission of Inquiry into the Public Investment Corporation has heard details of what appears to be another bad investment, this time into Nigerian oil company Erin Energy.
The PIC invested $270 million in Erin, buying a 29% stake in the struggling company. Ndivhuwo Tshikhudo, PIC's fund principal for energy, says his former employer, STANLIB, rejected the investment as it didn't have confidence in the case presented by Erin.
The PIC later extended a guarantee of $100 million to the company.
Ndivhuwo Tshikhudo says this was a bad investment from the beginning. Erin Energy embarked on a roadshow in order to raise funding through listing of shares on the JSE. Asset manager STANLIB rejected the investment, but the PIC put in $270 million in the deal. Former PIC CEO Dr. Ndivhuwo was the first board member seconded to Erin, and when he resigned, another board member, Ndivhuwo, was seconded. Erin Energy's operating license has now been taken over from the company by the Nigerian government as it owed on taxes and royalties.
Having seen this investment in 2013 and being able to make a quick decision at that point in time to say, no, let's walk away, let's not invest in it now. My views on the investment have not changed, and the events that have transpired since then have actually proved that that decision that I made at STANLIB was a good decision. It is not one we should be putting money in.
The PIC Commission also heard from Chivango Ndaza, a senior market risk analyst at the PIC. Ndaza told the Commission that the PIC received an investment exit offer from independent media. He says the proposal carried an implicit investment consideration for PIC to invest in another Sekunjalo entity, Sakamata Technologies. Ndaza says the conditional exit would have presented reputational risk as it would have been perceived as PIC funding its own exit from independent media South Africa. He says this exit would have translated into putting more money into Sakamata.
My personal opinion, it would have not been successful, Chair. I think if you look at the proceeds, the use of the proceeds that Sakamata stated that they were going to use the capital raised for, is a significant chunk was going to be for the consolidation of INM into Sakamata. I think that figure, if you've got 1.5 billion for the PIC's portion, estimation was about 2.5 billion of the 3 billion would have been just for that. So we are left with around about 500 million. If we are talking on the basis of a 3 billion capital raise here.
Ndaza says he found it strange that the committee that reviewed the investment case was aware of the risk view and continued to test it for appetite. The PIC was considering investing 3 billion rand in Sakamata, despite the company having been technically insolvent. The deal was approved, but the PIC never participated in the investment after the JSE pulled the plug on the Sakamata listing, citing failure to comply with the Companies Act. SABC News.